there was very heavy profit booking on Friday. However, the S&P 500 still managed to sustain and did not lose the 6,800 psychological mark. And other than that, the S&P 500 closed in the 682x range. So why is this so significant? For that, you need to see the Dow Jones. In the Dow Jones, the closing on Friday was above the previous all-time high. This means the profit booking that was seen on Friday, this profit booking is not going to break the market. This profit booking is not going to trigger a very heavy fall. Definitely there will still be some fall. However, that fall will be limited in the entire market. But again and again, the 682x in the S&P 500 will be seen or considered as very, very important. Now, why the 682x? What is so special about 682x? What we can see that on Monday, 8th of December, the S&P 500 intraday, okay, in the bull side, it hit the 6878, okay. In the bearish side, the low was 6827. And on Monday, in my first update, okay, I mentioned that because the Dow Jones is trading in the open equal to high condition, that is why the S&P 500 will trade in between 687x and the 682x. That's it. And if you think that Monday was an isolated incident, then no. If you look into the picture on Tuesday, the S&P 500 failed to move up significantly. However, the low on Tuesday was 6837. And again, exactly the same condition was there. And then finally on Wednesday, on the FOMC event day. So in this, the first update on Wednesday, I mentioned that S&P 500, okay, the lower side will remain around 682x. This is my level. So now we can see that continuously since the last week of November, we have seen that continuously S&P 500 was building a base in the 682x. And that is why you are seeing that on Thursday, it did not even enter the 682x. The low was 6833 on Thursday, and it hit, and for the first time it closed within the 6,900 range at 6,901. And why did that happen? Because on Thursday, the Dow Jones was trading in the open equal to low condition, was supporting the entire market. Then finally, we have seen a very heavy fall intraday on Friday. The S&P 500 came down from 6,900 to almost 6,800. Why? Because of the profit booking. So this was my pre-market analysis before the open of the stock market on Friday. So how exactly it is going to work in the next week? Okay. So first, whether it will move up or it will come down to what level after 682x, what will hold the fall? Okay, then the bullish retrace or not. All of these conditions I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of December 15th. Means from December 15th, which is Monday, to December 19th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. So first part is the technical part. Okay, I will do the technical analysis on the weekly and the daily chart. This way the picture will be very much clear whether the market is going to enter into the short-term reversal or if it will simply move up towards 7,000. Okay, technical analysis, technical part. The second part is the probable movement. Probable movement means how most likely, okay, how the market is going to behave in the next week, in the coming week. What will trigger the fall, what will trigger the bullish support, the bullishness, etc., etc. So now I am going to start with the first part. First part is the technical part. So now guys, this is the weekly chart. So technical part is divided into two parts. First is the weekly chart, then the daily chart. So first I will discuss the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, let's first analyze the candle. So if you notice, okay, it's a normal bearish candle. Normal bearish candle. It's not a heavy bearish candle like these or these. Okay, just a normal bearish candle. Okay. Secondly, the candle is forming a pattern which is actually a bullish supportive pattern. Okay, not a bearish supportive pattern, right? See, in the short term there will be bearish implications. Okay, So that I will show you through the daily chart. Short term means like for Monday, okay, Monday or Tuesday maximum, okay, there will be bearish implications, bearish something, but otherwise, okay, in the long term, okay, it is still supporting the bullishness. So the candle, okay, it does not indicate anything other than the initial or intraday bearish movement on Monday. Just the initial or intraday, no gap down or nothing, just an initial or intraday bearish movement on Monday. This candle is signifying. Now let's discuss the last weekly candle of the Dow Jones. This is the last weekly candle of the Dow Jones. Okay, this is actually a good bullish candle. Why a good bullish candle? The closing of the candle is above the previous all-time high of the candle. Okay, this is very, very important, not just to the Dow Jones, but to the entire US stock market. Very, very important. Okay, so however, this is not indicating a gap up open on Monday. No, it is simply indicating an initial or intraday bullish movement on Monday. So the candles are, you can say the candles are kind of neutral, okay, not supporting any heavy fall or any heavy bullishness. Okay, so but this will be very much clear through the technicals, okay, whether we are expecting any fall or just the reversal. In terms of the technicals, okay, see, this is the weekly chart. Okay, in terms of the technicals, S&P 500 is still bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart. And the S&P 500 is okay, again, this is the problem. Okay, this is the only problem is the MACD. You can see MACD is forming a bearish slip. Okay, and if you have subscribed to my YouTube channel for last many months or years, then I emphasize heavily on the MACD, because it doesn't matter, okay, what the other technical indicators are doing. If the MACD is bearish or bullish, especially on the weekly chart, then it alone, okay, can trigger that heavy fall or heavy bullish movement. In this case, because it is trading bearish, that is why I mentioned in the previous S&P 500 weekly technical analysis also that there will be a fear of sudden fall, fear of surprise fall, fear of sudden fall because of this thing. Anyways, so S&P 500 is bearish through the MACD, but is bullish through the stochastic RSI. Okay, and also it is neither saturated nor overbought. So S&P 500 will now be seen as 80% bullish on the weekly chart. Dow Jones, in case of the Dow Jones, picture is almost the same, because the Dow Jones is bullish through the moving averages, through the Ichimoku cloud, and through the Bollinger Bands on the weekly chart. Dow Jones is okay, this is something that will provide the relief to the market, is bullish through the MACD on the weekly chart. So this will counter the bearishness which is there in the S&P 500 through the MACD of the S&P 500. Okay, so Dow Jones is bullish through the MACD and bullish through the stochastic RSI. Okay, this combination is very strong bullish combination. Okay, this is supporting the bullishness. The only problem is that any more bullish movement in the Dow Jones will trigger the overbought condition. Okay, so Dow Jones is 100% absolute bullish, but any more bullish movement in the Dow Jones is expected to trigger the saturation and the overbought condition. Although if the saturation and the overbought is normal, then fine. In that case, it can survive bullish for next 1 week. Okay, and then in the next week there will be the problem. Otherwise, okay, it will be okay. So overall, Dow Jones is 100% bullish on the weekly chart. S&P 500 is 80% bullish on the weekly chart. What does that mean? This means that the long-term trend is still bullish, absolute bullish. Long-term trend is still bullish and absolute bullish, and the entire market has reasons to move up. Okay, in the S&P 500, it will be towards the 7,000 psychological mark, 7,000. Okay, but it will not be that easy for the S&P 500 to move to 7,000. No. Okay, there will be a lot of struggle in the S&P 500, and even the Dow Jones won't be able to help the S&P 500 as okay in this case, because Dow Jones itself will be heading to the 50,000. Okay, this is the mark. So this means that the entire US stock market has come into the condition wherein it is allowed to move bullish, not a problem, but in the bullish side, the bullish side will be limited. Bullishness is allowed, but is limited. In the S&P 500 this is 7,000, in the Dow Jones that is 50,000. okay, so 6827.42 was the closing, so you can say like 3% in the S&P 500 will help the S&P 500 to hit the 7,000 and 48,000. okay, so again almost 3% in the Dow Jones will help it to hit the 50,000 psychological mark. okay, but again it will not be that easy. okay, and still there is no guarantee that the indices can hit these very critical the levels. okay, so this picture will now be very much clear through the daily chart. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. okay, one candle means one day. okay, now on the daily chart the picture is very different. okay, weekly chart we have seen heavy bullishness. okay, and the long-term trend is still heavily bullish. On this the daily chart, if you notice, okay, if I analyze this, the last candle, okay, it's a very heavy bearish candle. Secondly, the closing of the candle is below the closing of the last many candles. okay, even open and closing below the last many candles. okay, what does this mean? This means bearishness in a manner that on Monday, okay, we can expect a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, especially because of this candle. okay, but this was not the case on the weekly chart, right? That is why I always analyze the weekly and the daily chart. okay, now let's confirm if the Dow Jones is also confirming the same. But in case of the Dow Jones, again, it a good bearish candle, not a very heavy bearish candle. It's a good bearish candle, but because the closing is above the previous all-time high in the Dow Jones, that is why we are not expecting a gap down open. No, we are not expecting a gap down open in the Dow Jones, just an initial or intraday bearish movement. That's it, nothing else. okay, so now considering the daily candles of the Dow Jones and the S&P 500, it is now clear that on Monday, okay, irrespective of anything, there will be an initial or intraday bearish movement. Considering the daily and the weekly candles and everything, on Monday, irrespective of anything, there will be an initial or intraday bearish movement. okay, there may or may not happen, happen this the gap down, but bearish movement on Monday. okay, if there comes a gap down, then that is good. okay, otherwise initial or intraday bearish movement. Now let's analyze the technicals. okay, just to confirm whether the fall, whether means the technicals are supporting the fall or not. Well, in terms of the technicals, the S&P 500 is neutral through the moving averages, but is bullish through the Bollinger Bands and the Ichimoku cloud on the daily chart. And the S&P 500 is bullish through the MACD, but is bearish through the stochastic RSI on the daily chart. And okay, neither overbought nor saturated. Last week I mentioned that, if you remember, last week I mentioned that any more bullishness in the S&P 500 will trigger the fall because it was saturated and overbought. okay, that is why we have seen that again and again it was struggling. So well, in this manner, the S&P 500, it will still be considered as bullish, but like 60-70%, you can say 70% bullish or 65% bullish. okay, that's it. Dow Jones, on the daily chart of the Dow Jones, well, it is very different. Dow Jones is bullish through the Bollinger Bands, through the Ichimoku cloud and the moving averages on the daily chart, and the Dow Jones is bullish through the MACD and the stochastic RSI on the daily chart. okay, it is neither overbought nor saturated, but any more bullishness, continuous bullishness, will trigger the saturation and the overbought condition. okay, This means that the Dow Jones is 100% absolute bullish on the daily chart. Well, this is very, very surprising, because on the weekly chart also we have seen that the Dow Jones is 100% bullish. Now, because Dow Jones is the prime index among these three, Dow Jones, S&P 500 and Nasdaq. Dow Jones is the prime index. So this heavy bullishness in the Dow Jones will help the entire market to sustain and to survive and not to fall. Okay, this is how we read, okay, this through the technicals. But the only problem is that if the Dow Jones continue its bullish movement, if it keeps on moving up, okay, then in next 1 day or 2 days it will hit the saturation and the overbought on the daily as well as on the weekly chart. That will then demand or will trigger the fall. Okay, so that is again a very, very important part here. So what we have seen is that the S&P 500 is holding bullish, but it is not absolute bullish. S&P 500 is showing some weakness. Okay, and if you notice, this will also be seen as the consolidation, okay, in the S&P 500. So there was very heavy condition on Wednesday and Thursday that was supposed to trigger a bullish breakout. Okay, but because the market went against the Feds, see, when I say against the Feds, okay, I mean that in the FOMC event it was clear that in the year 2026, in the entire year, there will be just one rate cut. Okay, this was something that market was not ready for. So this and heavy bullishness that you are seeing, this heavy bullish push, manipulated bullish push you are seeing, it was based on the speculation that Feds will give a rate cut in December, and then there will be at least 3 rate cuts, minimum 3 rate cuts in the 2026. But now this was against the market. Okay, because Feds are expected to give 1 rate cut and are expecting inflation to hold, okay, above their benchmark, like 2% above. So inflation is expected to hold. Okay, it is not going to come down. Well, all of these are factors indicates that the market, the Wall Street is fighting the Feds. Wall Street is fighting the Feds. What happens when the Wall Street fight the Feds? The Wall Street is the one that is going to lose, always, 100% of the times. It is the Wall Street that will lose. Okay, there are some scenarios. These scenarios are very, very special, especially when the market is about to enter into the correction or the recession, okay, or very heavy fall. These kind of scenarios. In these kind of scenarios, what happens is that the market will go against the Feds, against the Feds. Okay, and this will move up, this will go against the Fed just to bring down, okay, just to bring down the entire market, okay, after some time, after a few days or a few weeks. Okay, this whole exercise will be there just for this the very, very big drop. Anyways, this will be very much clear in the next section, that is the probable movement part. But guys, before I discuss this, the next section, the probable movement, I have this important information to share with you, that I give these daily precise updates to my Patreon community members every day from Monday through Friday. Okay, and it's not just about these precise updates every day from Monday through Friday, but I also give the opportunities in the premium stocks and the ETFs. Okay, 5050 to 8080, 50 to 80 opportunities, and that's not all, because I also give the mid-week update. This is the video technical analysis generally given every Wednesday or Thursday, and I discuss all of the bullish bearish conditions with the very, very specific numbers. So guys, if you also want to get these daily precise updates every day from Monday through Friday, as well as the stock market opportunities and the midweek update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says membership options. And when you click on this button which says membership options, then you will see that there are these 3 levels, level 1, level 2 and level 3. Level 1 and level 2 are same. The only difference is the geographical location. And in the level 3 is S&P 500 updates and opportunities. So when you subscribe to level 3, then you will be getting all midweek update videos, daily S&P 500 precise updates, levels, zones, movement, momentum, and also premium opportunities 5050 to 80. And guys, if you notice, many people have joined my Patreon community for last many days. weeks, months, years, and they are getting these daily precise updates as well as the midweek update video technical analysis and the premium opportunities in the stocks and the ETFs 50 to 80. So guys, whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I will give you the probable movement. This is the second part of the agenda. So here I will give you the probable movement, means what is expected to happen in the S&P 500, Dow Jones and also in the Nasdaq, and in a manner to the entire market in the coming week, the week of December 15th, means from December 15th, which is Monday, to December 19th, that will be Friday. So now, first thing first, next week, Tuesday and Thursday. These are the only two important days. Tuesday, the non-farm payroll data and the unemployment data will be released. Very, very important. Okay, this data is very important. Now, on Thursday, the inflation data. Okay, CPI data, inflation data will be released. So Tuesday, okay, Feds are still expecting some more weakness in the market. However, they are also concerned about the inflation. This means that if on Tuesday there comes the weak job data, weak job data, and also if the unemployment moves up, okay, the number moves up, if it shows that there is more unemployment now, okay, then it can actually help the market to sustain and to move up, because then there will be a speculation that Feds may give more than one rate cut in the year 2026. Okay, if it moves up, then it can move up only until Tuesday and until Wednesday, because then comes the inflation data on Thursday. If the inflation data shows any more bullishness, means the inflation is moving up, then whatever gains will be there until Wednesday, all of the gains will be erased and it will come down. Okay, but if the inflation comes down, then whatever gains will be there, then there will be more and more gains in the market. Okay, so this means that Monday is something, okay, that is not going to be influenced by anything. Okay, whatever the movement was there, means this kind of movement, okay, range bound movement, this will still be there on Monday. Okay, so now what we have seen here is that the 682x, the level, okay, it is holding, it is helping the market. Okay, however, on the daily chart we have seen that the closing of the candle was below the closing and the open prices of the last many candles. Okay, this means that there will be some weakness, some bearishness on Monday. However, this weakness in the market, in the S&P 500 on Monday, will be countered by the Dow Jones, because the Dow Jones has closed above the previous all-time high level. Okay, now whatever the fall will be there in the S&P 500, this fall is expected to be limited to the 6,800, to the 679x / 6,800. Okay, so a few points zone is there. This zone will be able to handle the fall here. Okay, because the Dow Jones will try to not to lose. Okay, however, irrespective of what is happening in the Dow Jones, if there comes hourly closings below the 682x level, continuously hourly closings, at least minimum of 2 hourly closings below the 682x level, okay, then this will trigger more fall in the S&P 500, though the Dow Jones will be in a condition to hold and to sustain. It will not give up heavily, but the S&P 500 will be in a condition to lose more because of these hourly closings below the 682x. And if the situation does not improve and the first 3 or 4 hourly closings are seen below 682x, then most likely the daily closing will also be below 682x. And this is the only known condition. Okay, hourly closings below the 682x and the daily closing below 682x, that can actually trigger the fall to the Ichimoku cloud. And now the Ichimoku cloud is in the around 6,750. Okay, Ichimoku cloud is there. Okay, so see, you need to understand the constituents of the S&P 500, Dow Jones and Nasdaq. Okay, they are almost same, but are still different in terms of weight. Okay, the because in the Dow Jones it is the Goldman Sachs, okay, then Microsoft, then CRM, okay, these are the primes, okay, and then Home Depot, etc. But in case of the S&P 500 it is Nvidia, okay, then Microsoft, then Apple, etc. Then Nasdaq is more focused on Nvidia, okay, Apple, etc. So constituents are almost the same, okay. Dow Jones has a little more different because Dow Jones covers all of the sectors, okay, but then the weightage of these constituents is different. That is why we can see a good fall in the S&P 500 and the Nasdaq, whereas at the same time we will see that the Dow Jones is holding, okay, Dow Jones is not giving up that much, right? So back to back hourly closings below the 682x will trigger more fall to the 6700, and once it start to trade in the 6700 range, okay, below the 6800 psychological mark, then it is expected to come down to the the Ichimoku cloud. However, before the Ichimoku cloud there is the 677x. There is my very heavy support level, okay, in the 677x. This support level, okay, will be able to hold the fall, okay, and only when it loses the 677x, this is the heavy support level, then only it will be allowed to come down to test the Ichimoku cloud, okay. However, the most important part is here, whatever is happening on Monday during the session doesn't matter, okay, but what matters is that on Monday, if, okay, on Monday, whether the Dow Jones will close above this mark or not. This is what? This is 48,431, 48,431.57. This was earlier the all-time high of the Dow Jones. Okay. Now, if the Dow Jones on Monday gives a closing above this 48,431.57, this means that Dow Jones is in a strongly bullish sustainable condition, wherein even if intraday there comes fall, then also intraday it will be able to recover, and then it will close above the 48,431.57. okay, so if this condition is seen, or as long as this condition is seen in the Dow Jones, the entire market will remain sustainable in the manner that S&P 500 can lose like 1%, 0.7%, 0.8%, but still it will remain in a condition to recover. When I say to recover, I mean like this. It will remain in a condition to recover, because whenever we see the profit booking, okay, the reason for the profit booking is actually to open the opportunity in the beer opportunity, so that they can buy. So they have earlier bought, now they were selling for last few days, now they have sold whatever was there. Now when it comes down, then they will buy again, and then it will be pushed higher. Okay, this is actually the meaning of the profit booking. Okay, so here the most important condition is in the Dow Jones. It all depends on the Dow Jones, because if the Dow Jones loses and the Dow Jones gives a closing below the previous all-time high, then whatever the gains were seen on last 2 days, okay, 11th of December and 12th of December, these will be negated. This will be a waste. In that case, Dow Jones will be forced to come down to around 48,000. And when the Dow Jones comes down to around 48,000, S&P 500 will be trading in the 6,700, around this the Ichimoku cloud. Okay, but closing below the previous all-time high in the Dow Jones can also trigger the short-term fall in the entire market. Means S&P 500 can be will be forced to lose the 6,800 to 6,700, and then to lose the 6,700 to the 6,600 range. This is where it will find a very heavy support, because there is a very heavy support zone. Okay, I've repeatedly mentioned that the support zone, and if it comes into the picture again, that I'll mention in the updates. If you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now this the bullish side. So see, the bullish side is there, will remain there, as long as the Dow Jones is giving the closings above the 48,431.57. As long as the closings in the Dow Jones are above this level, entire market will remain sustainable and bullish in a manner that even if the S&P 500 comes down, then also it will be able to recover and to trade bullish. Okay, but as I mentioned earlier, S&P 500 is 7,000. Okay, Dow Jones is 50,000 target. Okay, and these are the psychological marks, but this does not mean that the Dow Jones and the S&P 500 will simply move up and will hit the 7,000. Well, that's not possible. Okay, that's not possible. As such, there will be a lot of struggle, because before the 7,000 there is very heavy resistance zone, that can trigger actually the short-term fall. Okay, similarly in the Dow Jones, because it is heading to the 50,000 psychological level, and from 2020, okay, February March 2020, okay, so it's been only 5 years, and the Dow Jones has gained, not just Dow Jones, but Nasdaq, S&P 500, okay, they have gained more than 100%. Okay, that is too much within a very, very short period of time. So all of this means that there is a bubble. Okay, and the bubble is confirmed, right? The AI bubble is there, AI bubble, debt bubble. Okay, bubble is there. Okay, just like it was there, .com bubble and the housing market bubble. Okay, so definitely there will be the recession. Okay, but that is not expected to happen now or next week. Now, this will take some time. Okay, a few days, so not few days, a few weeks. Okay, in the year 2026 we can see, okay, in January, February, but not now. As of now, the market is still, there is a good scope in the bull side. Okay, and the market, S&P 500 is looking for the 7,000 psychological mark, and the Dow Jones is looking for the 50,000 psychological mark. Okay, but how this will be achieved, that is the thing. For this to happen, for the bullishness to happen, the S&P 500 must, it is a must, the S&P 500 must keep on closing above the previous all-time high. Okay, when there comes such a condition, when it keeps on closing above the previous all-time high, then it will be pushed up higher. Okay, it will push up. This will also help the S&P 500 to move up. Now, for the very first time on 11th of December, S&P 500 closed above the 6,900 psychological mark, okay, at 6,901. This means that S&P 500 has already breached, okay, or has already covered, okay, has cancelled this condition of the 6,900, wherein it was earlier struggling heavily to close above. Okay, this means that now when the S&P 500 try to move up, then there won't be any problem as such. It will be easily, okay, it will be able to move up, okay, and to close above the 6,900. What will help the, what will trigger this, the bullishness? So we need to understand that 685x level, okay, then 687x level, these two. First of all, S&P 500 must hold and sustain above 685x. Why? Because holding and sustaining above 685x, okay, it cancels all of the bearishness, okay, because then by default it will get the support of the 682x level. Okay, by default they will support holding and sustaining above 68 and closing above 685x, means it is now in a condition to recover the 687x. Once it recovers the 687x, then there is nothing to stop, then it will be the 6,900. And in the 6,900, now the only condition is the two successive closings above the 6,900 psychological mark. That is the only and the only condition. See, on Friday, if you see, the high was 6899.85. By 15 cents, it failed to hit the 6,900 just by 15 cents. One of my Patreon community members have asked me this question, that why the 6,900 is important and not just the levels. So it was because of the psychology, that it was a psychological level S&P 500 has earlier failed. That is why on Friday I mentioned that the S&P 500, that the 6,900 will act as the tiebreaker. Okay, so if the S&P 500 recovers and sustains above the 6,900, then towards the all-time high. Okay, but if it fails, okay, then the fall, okay, this fall, then we will see the profit booking condition. This is why I am saying a sustained movement above 685x, closings back to back, hourly closings, 4 hourly closings, daily closings above 685x is the primary condition, for the bullishness. Okay, for the 7,000 to happen or to be seen, the S&P 500 at first the S&P 500 must give the closings, must give the daily closings must give the daily closings. Before the daily closings, there will be the hourly closings. When there comes back to back hourly closings above the 6,900 psychological mark, then this will confirm that the daily closing will be above the 6,900, and also that the next day the daily closing will be above the 6,900. And when there comes two consecutive daily closings above the 6,900, now the S&P 500 is ready for the 7,000. However, from 6,900 to 7,000, okay, it is like 1.5%, okay, 1.5%. Okay, now you may think that within one day it will be able to hit the 7,000. No, it is not that easy. Okay, it can take a few days to a few weeks just to cover this, the very small, the distance from 6,900 to 7,000, because in between these two there is a very heavy zone, very heavy resistance zone. That zone will not allow the movement to the 7,000, that will protect the 7,000. Okay, so S&P 500 move up will fail at the zone, will be coming down back to the 6,800. Okay, probably to the 682x. Okay, then will hold, sustain, then will try again. So like after one or two try or three try, okay, then only it will be able to allow to move to 7,000. Because if it moves up without respecting the zone, okay, to the 7,000, this means that now the correction or the recession is very near, okay. This is going, and that can happen like within a month, okay, within 2 to 4 weeks, that can happen. That is why there is you know, this much of rush. Okay, so technically what we know is that Dow Jones, okay, the bullishness actually depends on the Dow Jones. Dow Jones is the only index that can help the S&P 500 to move up, okay, but will not help it to hit the 7,000. Okay, it will simply help it to move up. However, if the Dow Jones fails, then the S&P 500 is already under pressure, then the entire market will come down. There will be a very short term, like 3 days, 2 to 3 days of fall, okay, and then again a good recovery. So overall what we know is that the 7,000 and 50,000, 7,000 in the S&P 500, 50,000 in the Dow Jones are there in the picture, no doubt about that, but it is not expected to happen, okay, in very like within a day, within 2 days. No, it will take some time. Okay, bearish side is open, okay, in the S&P 500 and all. The situation in the bearish side will be bad, okay, will turn to worse if the Dow Jones starts to close below the previous all-time high level. Okay, in that case it will negate all of these conditions. In the S&P 500, any fall as of now to the Ichimoku cloud. Before Ichimoku cloud, there is the 6,007x my level. Okay, after that it is the Ichimoku cloud. Okay, this entire zone. But consecutive daily closings below the 6,800 psychological mark means that now there is very heavy possibility of the 6,600 range in the S&P 500. And again, remember, the Dow Jones, S&P 500, Nasdaq, they work and they trade in a sync. But this does not mean that if Dow Jones is up by 1%, then S&P 500 will also be up by 1%. No. Okay, so it depends, like if the Dow Jones is in the open equal to low condition or open equal to high condition, that its impact is heavily felt on the S&P 500 and Nasdaq. However, if S&P 500 is in the open equal to low or open equal to high condition, then its impact is not much felt on the Dow Jones. Okay, so on Monday we are expecting an initial or intraday bearishness, but again there will be a problem in the market. Okay, but Tuesday, if the data supports the market, okay, if the data shows that unemployment rate has increased, okay, and the non-farm payrolls have decreased, so this is favorable to the market, favorable to the Wall Street. There is one more thing that I forgot to mention here, that the Fed chairman, okay, Jay Powell. So Fed chairman he's going to retire in May 2026. Okay, so whatever is concerning the market is up to May 2026, because after May 2026 then there will be the new Fed chairman. Okay, then that new Fed chairman is expected to support the market. Okay, so now there is a theory, okay, there is no substantial base, but there is a theory that a heavy correction, okay, or whatever fall that we are expecting in the market, it will happen before May 2026. before the new Fed chairman comes into the picture. Okay, means he takes charge of he takes charge of the Federal Reserve. Okay, because that new Fed chairman is expected to push the market up by giving the rate cuts, back to back rate cuts. Okay, however, it will not be that easy, because he is not going to because there the FOMC members, okay, in the committee there are many members, and the decision is always by the majority. Okay, if the majority denies, then there will not be the rate cut, even if he wants to. Okay, that is why there is very heavy chances that the fall or the correction, recession, whatever, the beginning of that is expected to happen before May 2026. Okay, this will be more clear in the next FOMC meeting. Okay, when this is expected to happen, the correction or the recession. Okay, what will the earliest date? Not exactly the date, no one knows that the date, but yes, probably like within a week, 2 or 3 weeks. Okay, when exactly we are expecting that kind of fall, but that is not expected to happen now. Okay, that the bubble burst or something, that is not expected to happen now. Okay, so I hope guys this is clear. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.